Good morning. Good morning. We give you a few moments to get on. If you're watching this recording, feel free to skip ahead to get to about a minute and a half to get to the content. While I'm waiting for you to get on, let me make sure my technology is working and share this out to a few people. And let me make sure it's where it's supposed to be. All right. What's going on? Okay, so that's in one spot. And let me see if it's... Nope, that's not working like it's supposed to, so I'll have to figure that out later. But that's okay, We'll figure that out. Come on in, and set yourself down. Let me share this out in a few more places and invite people in. There we go. All right. Got that there. And all right. Almost got it. Okay. We're about to get this party started. So this is a great Facebook Live for people that are working a job where they're having to invest money. This is a good Facebook Live for them to watch. Okay. Let me invite some people, and then we're gonna get going. There we go. All right. So let us get the party started. My name is Lysandra Everett. I am the Home Biz Tax Lady, and I want to welcome you to my show. I help home business owners win the tax game by keeping more of the money they make and paying less to Uncle Sam in the form of taxes. Okay, you can catch me here every Monday through Friday, 9 o'clock-ish, to spend a few minutes with you talking about tax topics, talking about business. And you can catch me sometimes randomly throughout the day. So today's topic is about deducting job expenses. I have someone in my Tax Players Club that wants to know how much of their job-related expenses can be deducted from their taxes. So that is the question I'm going to answer today. And so if you know someone that's in this position, make sure you share this out so they can get this way cool information. Okay. All right. So I think I'm ready to go. Okay. So let's talk about job-related expenses. Let's talk about what are some common expenses for a job, okay? We're talking about clothing, commuting expenses. We're talking about materials and equipment, travel, meals. Let me write this down before I forget as well, okay? Good morning, Charlene. Okay, so first of all, let's talk about clothing, okay? Because this can be this is where people get into trouble actually with the IRS when it comes down to clothing. Okay, so the first thing is that if you have a specific uniform, when I say specific uniform, I mean a set of clothing that can only be worn at this job. And let me give you a few examples of what I mean. So we look at police officers, military people, and those types of professions where there is an actual uniform that they are required to purchase, that type of clothing. Now, you might have a uniform. So for instance, at Target, they wear the red shirts and the khaki pants, where, Walmart is the blue shirts and the khaki pants, right? There might be a uniform, but those are street clothes. So now let's talk about the difference. So let's take my husband, for instance. My husband is in the military and he has to buy his uniforms. Well, those uniforms, because he can't wear those anywhere else, right? It's an Army uniform. So those uniforms are tax deductible. Okay. Now, just like I said, at Target, they've got red shirts and khaki pants. Well, really, you can wear a red shirt and khaki pants anywhere. You can wear that out to eat or what have you. That's considered regular street clothes. So even though that might be what you're required to wear at Target, that is not tax deductible because it's considered normal street clothes. So even if you work in an environment where you might have to wear a suit of some sort, then even though you might have to go invest in a suit, that's not tax deductible. And even the maintenance of the clothing is not tax deductible. Now, for the uniforms, for my husband, if there's dry cleaning, if there's any alterations that has to be done, if he's got to get name tags sewn on, then all of that is tax deductible. Where with regular street clothing, even though you have to go dry clean your suits, that is not a tax deductible expense. So when we're talking about clothing, as a rule, generally your clothes that you wear to your regular job are not tax deductible. Maintaining those clothes are not tax deductible. It's only if there is a prescribed uniform that you can only wear in that particular environment. Okay, so I hope that makes sense. Now, when you're traveling, though, if you're traveling for your job and you have to send your clothes out for dry cleaning or laundry or something, that is a tax deductible expense. But just on a regular basis, no, it's not tax deductible. Okay. So now there are some jobs that require you to purchase your own equipment and materials. So I had a client that was a plumber. He was not an independent contractor, but he was employed with some sort of company, but he had to buy his own tools. He had to buy his own wrenches and all of that stuff. So because he is employed and they did not supply those materials and equipment, those things are tax deductible because they're needed to perform his job and his company did not supply them. So that is tax deductible. I even have a police officer who is also a client of mine that has to buy his own ammunition. He has to pay his own range fees and that kind of thing to go for target practice and all of that. Those types of things are tax deductible because you got to do it in order to stay competent at your job, and your company does not reimburse you. So that makes it tax deductible. Okay. Mileage is something else. All right. So normal commuting mileage is not tax deductible. I don't care if you got to drive 50 miles to get to your job one way. Normal commuting mileage is not tax deductible. Even if you take public transportation to your job, that is not tax deductible. That's the cost of doing business. Okay. Really, it's the cost of having your job. Now, if you have to travel for your job, let's say you have to go work outside of your normal area. Well, that mileage is tax deductible. So let's say you normally work in Baltimore and you have to go work temporarily at a location in DC. Well, then the distance that you have to drive to get there is tax deductible. Now, there are different ways that companies reimburse the mileage. Now, if the company doesn't reimburse you at all, it's tax deductible. But if the company reimburses you for that mileage, then you cannot deduct it on your taxes. Now, there are some times when you have companies that only reimburse you for a portion of the mileage. So for instance, if you normally commute to your job 20 miles one way, and to get to your temporary location is 30 miles. They may only compensate you for that 10-mile difference, okay? Well, if they only compensate you for that 10-mile difference, then you can claim the rest on your taxes, okay? So I hope that makes sense. And again, when you're traveling for business, if you have to come out of pocket for your job, if you have to come out of pocket for your job and they don't reimburse you, you can deduct this from your taxes. But if they reimburse your expenses, then you cannot. So if you're traveling for your job, let's say your job sends you to a conference and you got to pay for, your hotel and your meals and all of that. All right. So if your company does not reimburse you for that, then you can claim that on your taxes. So your meals will be deductible at 50%. Your hotel would be completely deductible. But you need to have a detailed receipt. We talk about this documentation all the time. It's not enough just to have a charge on your credit card statement or your bank statement. You got to have the detailed receipt that shows the date, the dates where you stayed, the hotel receipt is going to have the hotel name, the address, the date, phone number. It's going to have your itemized expenses, what you spent for lodging, if you had to pay for Wi-Fi, if you had to pay for telephone, then all of those fees are going to be on your itemized receipt, and you need to have that. So if your company, again, does not reimburse you, then you can claim it on your taxes. Now, with all of that being said, okay, here is the kicker. When it comes down to job-related expenses, you can only claim expenses over 2% of your adjusted gross income. So what does that mean? Okay, so let's say that you have a $60,000 a year job. So your income for the year is $60,000. And you might, after your standard deduction, you might have an exemption. So your adjusted gross income for the year might be $43,000. Okay. So you take that $43,000 and 2% of that is $860. Okay. So that means that only the portion of your expenses over $860 would be deductible. So in this example, let's say that you had $1,000 worth of job-related expenses. Okay. Well, you take that $1,000 and subtract the 860. So then only 140 of that would be a tax deduction. And the amount of that is going to depend on your tax bracket. So let me grab my calculator real quick. So if that, out of that $140, let's say you are in a 15% tax bracket. So essentially that would be a $21 tax savings. That's what it boils down to. So, yeah, you need to keep track of your job related expenses. Absolutely. But understand that you can only claim over 2% of your adjusted gross income. Let me tell you how this looks. Okay. So again, I use my husband as an example. The Army decides to change their uniforms like the wind. Okay. It's just crazy how often they change their uniforms. So, we have to buy those uniforms. All right. And if it's a dress uniform, it could easily be $1,000 without trying hard. The uniform itself, the shoes, the shirt, the tie, whatever they decide to change, we got to buy it. The PT uniform, whatever. So to spend $1,000 on a military dress uniform, easily conceivable. Okay, absolutely. But if that $1,000 does not exceed our 2% AGI, Cost of doing business. So, so the thing that you want to, the takeaway from this is, you want to have your job reimburse you for those expenses, okay, as much as possible. Because unless you exceed 2% of your adjusted gross income, it's going to be a wash for you. Now, if you do have expenses to claim, that would be on form 2106. Let me make sure so I don't get it wrong, but I do believe this is form 2106. Yeah, I'm pretty sure of that. Wait, let me make sure. I don't know why I didn't have that written down. Oh my gosh. There we go. Okay, so it's you have the form 2106, or there is line 21 on your 1040. That's unreimbursed employee expenses. Okay. Now, I just thought about this for my teachers. You can deduct, I want to say, up to $250 per year for for school supplies. So that's kind of a bonus. Okay. For my teachers, you can deduct up to $250 for school supplies. I know it's not much, but it's better than nothing. I love my teachers, and I really hate that you have to come out of your pocket for your kids to have the tools that they need to learn, but you get to deduct up to $250 a year. Okay. So I really hope this helps you out for my folks that are wondering about, the job situation and how, those expenses are deducted on your taxes. Again, you want to make sure that, as much as possible that you can get reimbursed from your job. Oh, the other thing, education expenses. I almost forgot. Education expenses. All right. So in some jobs, okay, in order for you to keep your job, you have to continue to increase your skills. There's sometimes you got to go back to school, right? So if you're going back to school to increase your skills to keep the job you have, that is a tax deductible expense. But if you are taking classes to get a job, that's not tax deductible. Okay. So if you go to law school, right, you get, education credits and that kind of thing, but the tuition itself is not 100% tax deductible. Now, if you're working in a law firm and they tell you that you need to go take XYZ class in order for you to do your job effectively, then does that become a job related expense? So I hope that helps on the education end. Hey, Tamisha, girl, I'm just finishing up. So you got to play and get all the good stuff. But yeah. So, but like I said, the takeaway is that when it comes down to your job, you want to make sure that they reimburse you as much as possible. Anything that they don't reimburse you for can be claimed on your taxes, but you got to look at that 2% AGI threshold. Okay. So that's it for me. Thank you so much for tuning in. Have a fantastic day. I will see you. Oh, yes. And if you are not in the Tax Players Club, you need to get in, because tomorrow we have a webinar training tomorrow on the benefits of a home-based business. And we're going to have webinars twice a month, but they're only going to be in my Tax Players Club. So you got to get in there to get access. Okay. So listen. All right. That's it for me now. I got a boogie. I'll see you next time. Bye.